Hello, traders. It's 8 a.m. Chicago time on Thursday, the 15th of August, 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Welcome to episode number 1575. This morning, looking at the overall market action, wow, just it's whipping around. There's a lot of headline based action this morning. The activity is very scalpish, pushing directionally pretty strong, and then reversing and pushing the other direction. The market is driven by the China-U.S. rhetoric back and forth. China came out this morning, earlier this morning, and well, morning my time. We're a global community here, and they came out and said that they expect that the U.S. will respect the their intention to not get involved in the Hong Kong issue. They are also saying that they will take. The finance ministry said it'll take action to counter the 10% tariff, which caused things to move lower, and then. Um, And then later on, the foreign ministry came out and said things are looking good. That there's likely to be that there is communication between President Xi and the U.S. But at 4 a.m. Chicago time, the finance ministry said we'll have to take countermeasures on U.S. moves. U.S. actions violate consensus reached in Osaka at the G20 meeting in June. Reiterates U.S. action deviates from right way to resolve issue. U.S. violates President G. Trump consensus with new 10% tariff. And then later on, we got, where is it? We got the foreign ministry spokesman saying, reiterates China hopes U.S. can meet halfway with it on trade issue. Notes previous to Trump comment that China needs to resolve Hong Kong issue on its own. Hopes U.S. does what it said. President Xi and Trump in touch via meetings, phones, letters, and so on. The market popped at about 6:30 Central, 7:30 Eastern. And then we got a bunch of numbers at 8:30 Eastern, but not before the China Global Times editor-in-chief tweets out the U.S. economy doesn't appear as strong as Trump said. Chinese society has full confidence to fight a prolonged battle with the U.S. Trade war and Hong Kong riots have hit U.S.'s positive image in China. Chinese society is more united politically and can afford a long-term fight. So that's a government-based newspaper. But the numbers that came out following that. Prelim non-farm productivity came in at 2.3 versus 1.4. Empire manufacturing came in at 4.8 versus 2. Initial claims came in worse, but retail sales, advanced retail sales, pretty important, came in at 0.7 versus 0.3. Retail sales ex autos came in 1 versus 0.4. Strong. And then, of course, Philly Fed came in at 16.8 versus 9.5, causing a pop in the equity indices. The current sentiment in the market is slightly on risk-seeking, a slightly bullish risk-seeking side for today. The leader today is the Dow up 150 points or 0.6%, followed by the Russell up 8.7 points or also 0.6%. The Nasdaq is also up 0.6%, 43 points. And the S&P is popping higher from yesterday's close, up 16.5 points. And then the Euro stocks are up 2 points. The rest are teetering on unchanged, except for the DAX, which is down 50 points, and crude oil down half a dollar, 45 cents currently, or 0.8%. Gold's trading 1,523, down 0.32%. So we see a kind of a slight risk on sentiment, but really overall, it looks to me like it is a mixed bag today mixed sentiment overall. So that's where we stand. Let's take a look at what's ahead. We still have some economic releases ahead. In about 10 minutes, we get industrial production in the U.S. There's no consensus figure for the year on year. The month on month expecting zero point 0.1. The NAHB housing market index comes out at 10, expecting 65, prior 65. And then more importantly, we're expecting business inventories expecting 0.1%. Later in the afternoon at about 4 Eastern, we get foreign bond investment, net long tick flows, and overall net capital flows in the U.S. Okay, this measures the flow of capital in and out of the U.S. So that's where we are. Let's take a look at what we expected yesterday versus what we got. Yesterday, given what happened the day before with that news, remember I talked about that it's likely better to just ignore what happened on Tuesday with the Trump announcement, and just take a look at the resumption of the auction, since we were opening at the scene of the crime. To look at the resumption of the auction, and the auction, as I drew yesterday, the auction is really pointing downwards, and we are likely to test up and push down. So that's scenario one right here. Scenario one is showing a small test up and a push down. The key target, as mentioned on Monday morning, pre-market, is 28.55.54. Those are expected to be hit this week if the auction continues the way it had been. And we finally got that. What we got yesterday is basically scenario two. We did open and test a little bit higher, but overall, we dropped nicely. The short setup, it's not often that we get such a clean short setup. The short setup was nice and clean, a very clear inability by buyers to continue higher. We tested up to 28.89 from an open of 28.82.50, and then started to sell off. And the target, of course, was 28.55 right there. 28.55. It ended up pushing a lot lower. We did pull back to 61.75. We left the VWAP and the mid behind for the entire session. We have two distributions. The interesting thing about the market yesterday is that it formed this middle distribution, and then later in the session, it started to form this other smaller lower distribution that ended up having the point of control. There was a lot of trading that was occurring right here in this box between 50 and 50 and 40. There was a ton of trading that was going on there, forcing an additional distribution. So if I stretch this profile, you'll see it a little bit better, that we had a point of control that was sitting right here, and that point of control shifted down here later in the session, and it did so basically in the last hour. So we have this middle distribution and then a lower distribution with a point of control. Given the way it closed, what we ended up with is a market that was really weak. It closed near lows with the point of control also near lows. So the expectation into the overnight session, as you probably would have guessed by now, is that we would continue lower in the extended trading hours. Does anybody remember why we expect this in a scenario where we close near lows, with point of control near lows, why we would expect this to continue? I can't wait for your answer, unfortunately, but basically what this means is that the auction was interrupted by time. The pit closed at 4:15 Eastern, and the market hadn't found its buyers yet. Remember, the market moves down to find buyers, moves up to find sellers, and if it doesn't find them, it just continues lower until it gets there, right? And so the expectation is overnight that if you're short, it's and you do, and it's in your plan to hold, then those are the kinds of days where you want to hold the short because it's likely to continue lower and establish and find those buyers below. And that's what we did, and we did it quite well. We dropped another 20 points from the low in the overnight auction between the low that was put in the day session and the overnight session. We have a 20-point difference, 28.37.50 to 28.17.75. And then at 6:30 Central ish, 6:21 actually Central, 7:21 Eastern, we got that news, and the news I just mentioned, and then the market popped pretty strong here. It rotated in just three 15-minute bars. It rotated about 40 points or so. It very, very quick. Actually, it rotated much more than that. It rotated almost 50 points from that low, pushed the overnight high by just a tad. The overnight high was at 28.65, pulled back to the mid, almost on the nose, and then we had our continuation move up to 28.71.75, which is the current overnight high, and we've been sitting tight since then. So what we have here is buyers found. You can see the taper on the profile, and we are back in the point of control. We're currently uh, above the low of yesterday, so we're inside of yesterday's range. We have pushed into the upper low volume node. This is not the key. This is not the key low volume node. That one's down here at 2850. But we pushed to the upper low volume node at 2870 and are holding steady. We have our overnight point of control overlapping where the bulk of the volume is for the day session yesterday. We're above mid, above VWAP. It looks to be basing, and it's really the market is positioned almost like it's looking for an excuse to squeeze higher this morning. That's how things are looking. And hey, I could have an opinion on whether the market's overbought, oversold. I could do the macro analysis. I could do all these analysis. It doesn't matter what analyses you do. The fact is the price action speaks for itself. So this is basically a V bottom here and consolidation. We have not taken back the rally up. We have not taken back the rally up so far, and we are holding in yesterday's range. This looks like it is likely to stabilize today and potentially push higher. So let's take a look at what we're expecting for today and where we may be headed. Again, the gray bands are my designated areas that I expect the market to respond. These are support resistance depending on whether we're higher or lower than the corresponding level. But overall, one second. Overall, we're opening above the point of control, above the key LVN at 28.50.75 or 25.75 actually, and we're opening in the middle distribution this morning. I'm expecting an open auction, but I expect that open auction not to last very long. I'm looking for the market to revert back towards the point of control in yesterday's close. Yesterday was somewhat of a trend day, somewhat. And so I expect a lower low today just to complete that auction. And then I'm looking for an impulse higher and then a likely retest of that 71 area, the 70-71 area, and then potentially holding inside of the range here for a base day. Tomorrow's options expiration as well. And we've covered a lot of ground here over the last week or so. We've sold off a fair amount. It's really important to pay attention to your news feed. If you don't have one, get one. It's the market is really driven by that. It's not that you'll catch the news before it happens. in the market, but it does inform. It's really important informing how much how much the market is likely to respond, how likely it is to hold, depending on who's tweeting what. The secondary scenario is actually one that attempts to revert back, but impulses up, pushes to this low volume node at 70, and then starts to attack the upper distribution and actually reverses some of the action we saw yesterday for a trip back to 2893, which is right in here, that old LVN, and then a consolidation up in this area, giving us a reversal on the day time frame. Scenario three is an open test up, drive down, and on a downward drive, I'm looking for 2801.50 on that. So that'll give us about 60 points of range. So the third scenario is an open test drive down. That's based on the idea that the news is likely to be refuted. Open test drive down, drive out of the range, and then just push through these areas down into 2801.50 for a bounce on the close. That's scenario three. Again, the market is likely to the easier flow right now, given all the information that's being input into it. The easier flow is to the short side, is to the sell side. So things are structurally not looking so hot for the buyers. But then again, as prices go lower, there's more and more likelihood that buyers would step in if there are buyers remaining. So we've seen this before where the world's coming to an end and then it just reverses and squeezes the shorts and ends up in a 60, 70 point rally. But given the inputs we've had so far, I wouldn't be surprised by scenario three kicking in. I'm leaning short on the open. I'm going to wait for the first 15 minutes or so. I'm not going to engage early on. The market is actually relatively thin still. It's been thin since about 6:30 my time, Chicago time, since that low was put in. So I'm going to wait to see which side kind of steps in and sets off the bigger trades. Here's what the order flow looks like. What an incredible chart when it comes to order flow. When it comes to order flow, I don't know what this is. Oh, it's odd. Um, what an incredible chart when it comes to order flow overnight. Hang on, it's loading. So here we reopen at 5 p.m. my time here in Chicago, and we start to drift up. We drift into this liquidity that was sitting there for most of the Asian session. That ends up marking the top, and then we sell off on the China Finance Ministry news, and we drop. And on this drop, there are quite a few collisions. So you can see the volume picking up the European session. A lot of collisions there. You see a lot of big dots. Let me make those a little bit bigger so you can see them. A lot of big collisions. These are 100 lots or better. And you could see this incredible trade right here where the liquidity was resting for quite some time in the 28, 30, 29 to 32 area. And the market just comes in and just smashes into it. And the first try, it smashes and pushes up. The second try, it drives right through it. There's more liquidity underneath there in the 28, 25 area, smashes through that. It gets a little bounce and then breaks through. And then more liquidity comes in. And this, to me, looks like buying liquidity, by the way. This looks like intentional buying here. This looks like accumulation coming into the market, and it's not based on news because it started way back here. I mean, it's been sitting there for quite some time. So somebody is accumulating down here. It looks like to me accumulating or hedging, but they took them. They took those. They took those contracts. Market pushes through by a little bit, and then we have these dots, these bigger dots coming in as folks cover some panic covering, and then here's the splash up on the foreign ministry coming in and talking about how things are looking are being worked out with Xi and Trump via phones and whatnot. And we collide into this liquidity again, and then we have this liquidity coming in again, and you can see there's plenty of liquidity again in the 45-40 area. Just a lot of liquidity everywhere. There's pretty good participation today. I expect the market to trade well today. But if you look higher, look at these liquidity pools, man. This is great. Remember, the key target was 2801.50 below, and look at the liquidity that's sitting there. It's quite large. There's likely to be quite a bit of volume and a fair amount of action today. So make sure you don't knock yourself out or hit your limits early. Be patient. It makes sense to hold off for an hour and let the market set up. This is the kind of day where you'd want to do that. Good luck today, and I'll catch you tomorrow morning. Take care.